So welcome to another episode of the Keep Africa Trading Podcast from TradeMark Africa. In this conversation, we're going to be discussing digital trade across the African continent with Alan, who's going to give us specifics around what they're doing on a continental basis. But more importantly, we're here in Kigali for the Africa Trade Development Forum. And more importantly, today on the 2nd of December and the 3rd of December, a lot of conversations are going on here regarding what are the opportunities, the challenges, and the possibilities for trade in Africa, and specifically from a digital trade perspective. And Alan is really going to sort of break out for us what TradeMark Africa is doing on a continental basis, but more importantly, what we can expect from them going forward. Thank you so much for joining us, Alan.
Thank you, Moses.
So maybe you can tell us a little bit more about yourself and what it is that you do at TradeMark. And more importantly, just give us a sense of your background as well.
Okay, thank you so much. So I'm Alan Sophia Asiimwe. I'm the Deputy CEO and Chief of Programs at TradeMark. In essence, I oversee all our programs, technically, operationally, and strategically, ensuring that we are driving trade for Africa, because we see trade as a critical pathway to prosperity. We believe Africa can trade itself out of poverty and can really trade, first of all, with itself better, but also more importantly with the rest of the world. I'm super excited to be here for this digital conference, because for us it's the culmination of a lot of work we've done in the digital sphere, and I'm happy to talk to you about that. So TradeMark Africa has been in existence for around 14 years, and our main focus is on reducing the time and costs of doing business. And we found that a lot of the costs are to do with the barriers to trade. For instance, the border crossings, the poor infrastructure, the bureaucracies, roadblocks, So we work along trade corridors that connect countries and where goods pass as they're either going to be imported or exported. And we found that there are so many barriers. Even when the tariffs are reduced, the behind the border processes and the barriers remain very high and keep trade costs high. So we've worked a lot on trade costs, on reducing the time, on increasing exports from the region, because yes, you may be efficient, but what are you trading? And then we're also looking at jobs, especially green jobs and investments. And underpinning this all, we are trying to look at inclusion. We cannot trade and leave people behind. Where are the youth, where are the women, where are the disabled groups? But most importantly, are we doing it in a sustainable way, both inclusive and green? Because we know if we do not meet the green standards globally, we are unable to trade, for instance, our coffee. If the EU cannot trace where this coffee is coming from, we are not able to access those markets. So in a nutshell, that's what we do.
So the theme of this particular forum is digital trade. And I know it's a first after a fair bit of time.
Yeah.
It's a very big event. I've seen such a great turnout, lots of people from across the continent. But why now, why here? Why is this so fundamentally important that we have this conference themed around digital trade?
So for the first decade of our work, we focused a lot on infrastructure, hard infrastructure, and also some soft infrastructure to unlock trade barriers. We built roads, we built border posts, we did a lot of stuff that needed to unlock key blockages along trade corridors. But then we did recognize the power soft infrastructure had, the digital innovations. In the last decade, we've done quite a lot of work around automation, single windows, working on non-tariff barrier reporting mechanisms, anything that makes the region more transparent in terms of its trade. We have worked on regional electronic cargo tracking systems that allow transporters, freight forwarders, governments, revenue authorities to really track cargo, both imports and exports across key corridors. This is key for trade and for keeping borders open. So at this moment, we do recognize that we can actually use this digital trade and innovations to leapfrog, literally. We've seen what mobile money has done, M-Pesa has done for the Kenyan financial sector, but we have also seen other reforms around the world, especially not just automation, but e-commerce. I mean, the Alibabas and the Amazons of this world. Why can't we as Africa have these, allowing us to trade with each other, And so we are seeing the opportunities now. Our current strategy for 2023 to 2030 has 3 key pillars. The first is on digital, the second is inclusion, and the third is green. On digital, we are seeing a great opportunity to scale up the work we have done and to bring in new technologies, to bring in blockchain, to bring in AI. Let me give you an example. Right now, we're working with the Revenue Authority of Uganda and Kenya to share images. Like if your trucks are passing through, instead of buying one scanner at $3 million for each border, you can now share the images. But it takes right now a human eye 6 minutes to look through an image and decide, should I check this container further or should I let it go through? If we deploy AI, we are able to do it in 30 seconds.
Wow.
And if I just give you the sheer number of images that are being scanned daily, 3,000, if you add that, it's millions of images in a year. You can't have human capacity to do that.
It's not sort of possible.
It's not possible. So now we are saying, can we bring in AI to do better, especially in looking at the trends, in looking at what kind of issues are we seeing as we track this cargo across the corridors? What are the trends we are noticing? And can AI be deployed to make this work much easier? Because if you're going to scan and it takes a day, inspecting that truck will take 2 days. Physical inspection is going to take 2 days.
Amazing. That's
but if
time
you can,
lost.
That's time lost. You're losing 2 days at this border, 2 days at this border. By the time you go across the border, it's 10 days. But with AI, with digital, you can reduce that to 30 seconds. And the decision is made for you to cross the border. Yeah. We are doing things like smart gates, so no border stops for trusted.
No human intervention.
No human intervention. We want to pilot that on the northern corridor between Kenya, Uganda, DRC, where we're saying if we can trust that these commodities are what they are, the images have been scanned, the driver's details are known. Once they reach the gate, automatically they're let go. Can you imagine what this will do? Just as an example, at the border of Busia, they receive over 1,000 trucks a day. It's not humanly possible to go through all those trucks in 24 hours. How much time would it need to go through each truck? And the volumes are set to double in the next decade.
And all of these things are legacy processes, right? A very analog approach to doing things. Which has meant that it's just not scalable.
It's not scalable and it's not doable. The volumes are growing. If you have 2,000 trucks, even if you deploy 20 officers and how many desks and all, you're going to still need 10 minutes to go through one shipment.
Yeah.
You won't be able, it's not feasible. So we have to deploy systems that increase trust, that reduce the risk. And that's what our focus is right now. In addition to other systems like TLIP that you heard about, the Trade Logistics Information Pipeline, that allows you to trust that, well, this water has been tested by KEBS, Kenya Bureau of Standards. It's authentic. I can now accept it, in Europe, because that is lacking.
Yeah.
By the time they write to KEBS, if your shipment has reached Europe, they are writing to KEBS, is this thing from actually certified by you? But if it's blockchain, it's authenticated immediately, and your goods are led to access the European markets. Yeah.
Amazing. So let's remove the manual, redundant processes.
Yeah.
Let us use proof of authenticity through data. And basically, a lot of those steps are eliminated because now it's just all automatic.
And it's all trustworthy because you're using blockchain. It cannot be altered. All these revenue authorities, remember what is their cardinal want? They want to raise revenue.
Yeah.
But they go about it the wrong way. They think that by increasing enforcement, by being tougher on business, you're actually going to get more money.
Squeeze them out.
But that's worse because you shut down business. But if you do it differently, if you make it facilitative for people to trade, they will trade more. Then you collect more revenue through other taxes, domestic and the like. So it's intuitive that if we actually facilitate trade, make it easier for someone to move their goods across the region, say from Kenya to Ghana, actually trade will boom.
Correct.
Traders, if you've seen traders, you talked about being an old school entrepreneur. You find an opportunity, you go for it.
Oh, yes.
But if there's so much regulation and after 2 years, you're like, let me give up. But if there's a conducive environment where you started with one shop, if it were a cafe, you open 2 more, 5 more, and you find, that you're growing. And what happens? The government is benefiting more. People have jobs. And so that's the argument we're trying to make with the governments.
Talk about the other 2 pillars. You talked about green and you talked about inclusion. Yeah. Please expound on those as well.
So what we have seen is that a lot of the reforms that have happened in the first decade, the work we did, it really reduced the bureaucracies and increased efficiencies, but the gains were not passed down to
there's no trickle down.
So the shirt that you've imported at $25 today, even when the biggest cost is transport in that shirt, not even the making of the shirt, it's the transporting and of that material. It maybe will take, say, 40% of the cost, the bureaucracies, the red tape. Then the rest will be, what goes into making the shirt. But even reducing the transport cost and we found that the benefits were only staying with the transporters, the business owners. They were not trickling down. We also found that the small businesses were not benefiting as much from these processes. So in the last few years, we've worked a lot on simplified trade regimes that allow, for instance, the cross-border traders who deal in under $2,000 to really cross the border using simplified processes. But we're also using digital solutions. So one of the most innovative ones, which I'm so excited about, is called iSoko. Market, almost like an Alibaba. So it's a platform that does so many things: bookkeeping, legal education, but also actual market information and intelligence. Who wants my mangoes? Who is looking for pineapples? Where can I buy art crafts? Who is selling? Who is buying? All that is there. And we now have over 80,000 women and young people and men registered on this platform, and they're using it daily. We are now just going to add the payment solution so that you're able to pay and conclude end to end. So this allows overnight, 80,000 people can trade across the region. You know, you can trade from Turkana region to here. You can say, someone is looking for fish, and you're able to access that market. So that's inclusion, and we are seeing digital having the opportunity to scale. We are trying to look at cross-border payments solutions, working with the East African community and with the central banks, so that we're able to bring all these people who are buying. I talked of an example of selling fish. Yeah. You're in Turkana region, you've managed to get your fish. You have market in DRC, but by the time it crosses through Uganda to DRC, getting money paid in the DRC
perishable good,
franc, then you have to turn it back to the Kenyan shilling, you lose. So we're saying, can we make these payments? You're paid in your Kenyan shilling, you've sold it in DRC, and things are good.
Just kill that whole process.
So digital is so central to this whole conversation. The other one on green, we are looking at the markets we access. If you look at Africa, and especially East Africa, a lot of what we export, fresh produce, goes to Europe. It's our biggest market. But Europe has put in place new regulations on deforestation, on carbon emissions, carbon footprint. For you to access that market, you have to show that these goods are green, their footprint is low. And so you found that, for instance, you have to trace, if it's your coffee, you have to trace that this coffee was grown not by cutting down massive forests land, but you're able to show that you did it in a sustainable manner, and that this coffee can be traced back to a certain specific location and farm, and that the standards meet the global market. So for us to access these markets, we have to go green, both in the production of our goods, in the transportation of our goods. And so one of the projects I'm really proud about that we are working on is called the air to sea freight, because our goods were being rejected in markets for having a high carbon footprint.
Wow.
Because Kenya exports, say, using Kenya Airways. In the belly of the plane, you're finding all the French beans and the flowers.
And it's so considered high footprint, yeah.
It's a high footprint. And so when they get to the supermarkets, people are like, buying an avocado or this from Kenya, vis-a-vis buying it from this country, which has a lower footprint, the customer preferences are driving the regulation, and they're driving the market demands. And so what we're trying to work on is, can we move shipment of some of these produce to sea? And so we are working with Kenya Ports Authority, Kenya government, and we're soon expanding it to Rwanda, Uganda, and Ethiopia, and other countries, to see how we can increasingly move, especially to reduce the emissions and the carbon footprint, how we can reduce this through sea freight. But we're also working on other projects to adapt communities that are used to floods. In northern Uganda, we're working on a project in Elegu where we are doing the first climate smart market. This market perennially floods, or if it's not flooding, it's burning because of the adverse weather, 40-degree temperature. And so we are trying to look at the weather patterns for the next 10 to 15 years, predictive weather data, and saying, okay, if we know it's going to rain increasingly for the next, so the market must be resilient. Because now when it floods, all millions of shillings are lost in the flood every year for the last decade. And as the weather changes, it becomes more adverse.
Getting more severe.
So now we're doing a market that hopefully will mitigate. It will be climate resilient, and it will hopefully mitigate those adverse weather patterns. So we are using data to predict what the weather is going to be like, and trying to put that into the design of the buildings. That's the way we're working now.
So as we look at all these elements and looking at those three pillars, I see digital is a key component of enabling.
It underpins everything.
All the different pillars.
Yeah.
So what are some of the challenges that you're experiencing around it? And also at the same time, what are the opportunities?
I think we've talked about it. One of those, the issues that came out at this conference has been the fragmented policy frameworks Fortunately, now we have the AU digital trade policy,
Okay.
but we know that there are restrictions on cross-border data transfers and data flows. Countries are putting in place a lot of policies that could undermine free flow of data.
It's about the data sovereignty, yeah?
Data sovereignty, and then the whole issue of national security, the whole issue of personal information. And yet we know that personal information now is gold, or information that allows, commercial information as we're calling it, that allows you to have a whole data source of, say, 200 million people that can buy your products. But if everything is closed up, how are you going to be able to trade? It's really literally the gold, the new gold. But if you're not opening up that mine, you're not going to be trade. So we've seen, well, that's a big challenge, the fragmentation. We've seen the lack of trust with data. So for instance, with TLIP, for you, TLIP, Trade Logistics Information Pipeline. Let me give an example. Say Kenya Revenue Authority recognizes that most of the imports that come into our country are coming from Pakistan, say China, India, and say the EU. And so you want to be able to share your data with Pakistan, with India. That means you put your nodes, you know, the data infrastructure. You connect it and you're able to, the interoperability and sharing. Getting governments to accept is really a challenge. So we're doing it on a slow scale basis. For instance, there are some countries already connected, say Malawi and Tanzania, their customs can share data.
Fully connected, wow.
They are now sharing data. Hopefully it will reduce the time of processing, because customs is so central to the trade process. How do you ensure that you're doing data financing or digital financing, but not increasing the cost? How can you do it on an equitable basis?
Wow.
Yeah.
What about the opportunities?
The opportunities are immense. We've already talked about what we have learned in the last decade from automation and digitization. It's opened up a whole new world for East Africa especially. If you look at the volumes of trade, they have grown. If you look at the average time to process, it's gone down by half in many cases, even more. Like, for instance, to cross the border at Busia, it takes 30 minutes to process the documentation, you know, because it's all connected. Uganda, Kenya are connected. They all have visibility of the, say, manifest or customs documentation. So it makes it much easier. So the opportunity is huge to connect across corridor. We are looking at smart corridors. We are saying if you make these open corridors like digital highways where you're able to, it will just transform Africa's trade, especially intra-Africa trade. We've heard about how all the traditional trade routes were external. If you look at the roads, they're all leading to the port, to the sea. We now need to be looking internal. And for us, digital provides that opportunity. If we can come up with digital highways. So let me give you an example. One of the things we know, Kenya is trying to access Ghanaian market, and Ghana likewise is trying to access Kenya market. They have a lot of good shea and pharmaceuticals they believe could be marketed here. And Kenya has a lot of fresh produce that Ghana doesn't have. Fresh tomatoes, vegetables. When you're in Ghana, you really can struggle to get fresh vegetables. But for all these goods to seamlessly pass through, the customs have to be connected. So that when you land your shipment in Accra, it's cleared instantly. So right now we're working on connecting the customs. It will be groundbreaking. Customs between Kenya and Ghana, and they will be able to share data. And then if you're one of the exporters, because as I said, trade flows happen where there's there is efficiency and where there's not too much regulation to stifle. Trade will happen. It's like a river, it will follow a path. So if people know that there are opportunities in Ghana and that it's easier now to trade with Ghana, they will trade. So these are some of the things we're working on.
We just have to make it easier.
We have to make it easier, facilitate. That's why we call it trade facilitation.
Yeah.
Yeah.
So there you have it, a wonderful conversation with Alan from TradeMark Africa, giving us a scoop on what they've been up to and what they plan to do going forward here at the Africa Trade Development Forum. And more importantly, we'd like you to join us for other conversations right here on this podcast to understand the picture, the opportunities, and the possibilities with a lot of optimism in terms of what Africa can achieve from a trade perspective if we just pull all the pieces together. Thank you for joining us.